Welcome everyone to today's Title Topics webinar. These are ALTA's free presentations that we offer every month on issues important to title professionals. I'm Jeremy Yowie, ALTA's Vice President of Communications, and today we've got a fantastic webinar planned for today on closing instructions. While we all know everyone's working hard to comply with the regulatory changes TILA has brought to the closing process, it's also spurred lenders, a lot of lenders, to modify their closing instructions. And today's speaker is going to discuss the importance of reading all of these instructions. She's going to share examples of different closing instructions and to detail how you can push back on lender requirements. Before starting, I just need to touch on a few housekeeping items. A copy of today's presentation was emailed earlier today to all registrants. You can also download the PDF from the GoToWebinar window pane. If you didn't receive the email from me, you can send me a message at jyowie@alta.org. And you can also send me a note here on the webinar, and I can send you a copy when we conclude today. All participant lines are muted for today's presentation. If at any time you have a question, please use the chat box function, and we'll address questions at the end of the webinar. And again, as I mentioned, today's presentation is being recorded. After it's processed, and hopefully we can eliminate some of the background noise I'm experiencing right now, the recording will be available on ALTA's website at alta.org/title topics. That's alta.org/title topics. And again, as I mentioned, a link to the recording will also be emailed to everyone. I need to thank Fidelity for sponsoring our Title Topics webinars this year. Their support allows us to continue providing these educational opportunities free of charge. And with that out of the way, please let me introduce today's speaker. Joining us today is Margaret Sklenar. Margaret is co-owner of Metropolitan Title of Indiana. She has owned and operated several title insurance and escrow offices throughout northern Indiana and is an industry veteran for more than 35 years. Margaret also writes and teaches continuing education classes for realtors as well for title insurance licensing. And interesting nugget that I noticed in her bio, she enjoys playing with several symphonies in Northeast Indiana. So maybe a little more on that later, but for now, Margaret, thanks for joining us today, and I'll let you warm up the strings and kick off today's presentation.
Great, thanks for having me. I'd like to talk a little bit about what has happened with closing instructions and different things that are going on since the TILA. I know that a lot of you that have joined us today are veteran closers that have been around for a long time, and I also know that we have some folks that are just now joining the closing arena. So I wanted to revisit a couple of different points about closing instructions. I want to talk a little bit about the intent of closing instructions, the content of closing instructions, contractual liability of signing closing instructions, and what happens if you have no closing instructions. So, first of all, the intent of closing instructions is mainly to establish a procedure to assure that the loan is properly closed and returned to the lender. And by that, the lender is going to tell you in your closing instructions certain things that they want you to do or certain things that they don't want you to do in order to ensure that the closing documents are signed correctly and are recorded correctly. And to be honest with you, and I can say this, I'm sure it doesn't affect any of you, but I'm a closer. I'm a long-time closer. And I have been hurried through the process for many, many years, depending on the different types of lenders that we work with. And often closers will look at these closing instructions, and the closers don't actually read their closing instructions. Now, those of you that are raising your hand and saying that's not true, I have to applaud you. But in my interactions with closers throughout the United States over the years, most of us do look at the numbers, and then we'll look and see if there's, and we glance carefully, like in 30 seconds, to see if there's any special conditions. and then we move on to the closing. And then I also think the next thing that we look at is where do we send the package back to. So I want us to back up the train a little bit and revisit the intent of closing instructions and how we are the actual eyes and the ears of the lenders at the closing table. Your closing instructions are also going to establish conditions for funding the loan. They will tell you you need a funding number. We'll go into that a little bit later here, or exactly what conditions that we have to collect at the closing table in order for the loan to successfully fund. The lender will also tell you what kind of coverage that they're looking for on your title, not only your title commitment, but your final title policy. A lot of lenders also talk about how to avoid mortgage fraud and what expectations they have for us as the closers to avoid those types of situations. They will also address how do we comply with federal and state regulations and what we're supposed to do with secure information under the Gramm-Leach-Bliley law. So all of these things, it looks like a lot of information. And again, those of you that close loans, you'll see all kinds of instructions coming from lenders, from a one-page closing instruction to a lender that will have maybe a 5- or 6-page closing instruction along with CD information, to a lender who will have master closing instructions all the way through specific instructions. And we'll go through those a little bit later here as well.
All right, so the closing instructions, those of you that didn't hear, are intended to establish a procedure in order to assure that the loan is closed properly and that it's returned to the lender in the condition the lender has asked us. We are the lender's eyes and ears at the closing table. They also will establish conditions for funding the loan. They will tell us what kind of coverage that they would like to have on their final title policy. A lot of lenders will ask us to do certain things to avoid mortgage fraud. Also, they'll deal with information that complies with federal and state regulations, as well as how do we handle secure information under the Gramm-Leach-Bliley transactional laws. So as you can see, if you just look at these few things, this is a lot of responsibility for our closing agents as we work with the lenders to get consumers to the closing table and into their new homes or into their refinances. I'd like to cover a couple of different things on closing instructions. One of the biggest concerns that I have as a closer is what contractual obligation have I put my company into by signing closing instructions. I looked at a few of these over the last few weeks, and those of you that are in your offices, you can just clearly pull up even the last few closings that you closed, and I think you'll see that when a lender asks you to sign closing instructions, you are saying things like, we are certifying that we have closed the transaction in accordance with the lender's instructions, and then you can read between the blanks. There are certain things that lenders will say that they expect to happen in order to get the loan back in compliance. So more importantly than anything, when you sign closing instructions, you are actually creating some kind of a fiduciary responsibility between you and that lender. When you look at the closing instructions, a lot of companies deal with certain things, and they come right out and tell you exactly how they expect you to handle certain things. One thing is closing instructions responsibilities. One of the things lenders ask us to do is to protect them from their consumers from identity theft as well as fraud. We have to make sure as the closers that the right people are coming to the table and that the right people have been properly identified as the people that are signing our document. Not only is that important for the lender, but as a title agent or a title insurer, we have to make sure that we're not setting ourselves up for fraud. So again, in talking with closers, a lot of closers will make a copy of IDs. They'll even sometimes fill out a form that the lender has for them to fill out for identification purposes. But again, I'm sure this isn't you, but a lot of closers tell me they don't even bother to look at the pictures to see if it is the people that are present at their closing table. So just a little reminder that it's good to do that. Your closing instructions will also talk about RESPA compliance. We have to make sure that we are, not only are we in a position that we are not in a violation of RESPA, but we also want to make sure that the lender is not in that position as well. Again, when you go to the closing, we have a little bit of a, we wear several different hats. Number one, we don't represent anybody. We're the unbiased party, but we also are the insurer that's going to issue a title policy. But we also have to make sure that we are there for the lender to make sure that their closing and their documents are pristine and that we haven't set them up for failure. Your closing instructions will also give you requirements for the loan estimate if it's for a preliminary CD or CD requirement. Most lenders are requiring that we use their CD, but there's that back and forth work that we do to make sure that we balance before we go to the closing table. Some of your closing instructions will talk about flip transactions. Lenders want to make sure that they're not defrauded at the closing, so we need to make sure that someone isn't closing on a piece of property and 15 minutes later selling it for $50,000 more if there is an insured mortgage that's going to be in effect. Also, the lenders talk about source of buyer's funds. If you'll read some of your instructions, it will talk about the buyer has to have a certain amount of funds and it has to be drawn on a certain bank. There's some pretty specific criteria that lenders have for that for underwriting purposes. Again, I had an opportunity to talk to a few closers yesterday, and I'm told that often they look at the money to make sure that the money is correct, but not necessarily where the money is drawn from. So again, just a general reminder to take a look at that. Your instructions will also talk about the sales price of the property, also whether the buyer is occupying the property. That is a big one. We have to make sure that if the lender states that if there's an occupancy letter, that the borrower is going to occupy the property, and to make sure that all of that is where it needs to go. If not, then we have to make sure we talk to that lender and find out how they want us to handle that if they're not going to be occupying the property as a primary residence. Another thing that closing instructions will cover is no secondary financing. I've seen closing instructions come in that state that there's no secondary financing, but when I look at the information for the CD, they'll have on there, there's a second mortgage coming from another arm of their bank. So if that's the case, you're going to want to have to make sure that that is cleared up if there's a no secondary financing requirement. The lender will also tell us what endorsements they're looking for on their title policies. Some lenders are better at this than others. Some lenders will talk in generalities. They'll say things like if there's a PUD or an adjustable rate or things like that, those are the endorsements that are required. Other lenders will specifically tell us what endorsements they're looking for. Your instructions also cover things stating that clear title with no special assessments. It will talk about no encroachments. Any and all encroachments have to be insured. Policy free of any encumbrances. It also talks about the policy delivery. Some closers actually will give their policy at the closing table. Others are not in a position to do that. But in most of the instructions I looked at, the lender is asking for that title policy within a 30-day time frame. And one of the big things that's talked about in closing instructions as well is that the vesting should be in the name matching the mortgage. I am not sure what all the state regulations are, but that is obviously something that should match. The mortgage needs to match the deed from an insurability standpoint. And sometimes closers get caught not having an opportunity to check that out as carefully as they would like. For instance, I saw one the other day in which the realtor ordered the title and the commitment in the name of husband and wife, and when we got the closing instructions, the instructions and the mortgage that the lender wanted signed at closing only had the Mr.'s name. So clearly we would have a title issue if we didn't address that at or before, preferably before the closing. Again, just a general reminder to make sure that your documents do match your vesting deed. Other conditions of closing instructions are hazard insurance. This is an interesting one. Years and years ago, as a closer, we used to have to collect the hazard insurance policy at the closing table. With the HUD reform of 2010, as well as with the onset of TRID, it doesn't quite work that way anymore. In fact, the hazard insurance is given to the lender. The lender approves that insurance, and often they tell us what the insurance is, but we struggle with getting a copy of the invoice so that we can pay that at the closing table. Same thing with flood insurance. Again, the lender will collect that flood insurance and will actually just pay the bill at the closing table. But again, we'll need the invoice to do so. The insurance piece has changed a little bit with TRID. Taxes and assessments. As you look at your closing instructions, they do talk also about if taxes are due within 60 days of the date of the closing or an assessment. All of those need to be paid at the closing. You're going to need to work with your lender. Some lenders don't say 60 days, some say 30 days, but again, it's something you'll want to pay attention to on your closing instructions. Right to cancel. I've got an example of this later, but there's specific instructions on how to handle the right to cancel and how many copies. Signatures, especially the lenders that have more entailed closing instructions, go into signatures. Some will talk about power of attorneys. Some lenders will allow a power of attorney and other lenders will not. Those lenders that will allow a power of attorney most often will talk that they want to see a copy, they want their underwriter to approve it. More specifically, they will give certain instructions on how the document needs to be signed. And as I looked at closing instructions, none of them want their power of attorney documents to be signed as POA. They want their people to sign as attorney in fact or that kind of verbiage. There's always a section 2 that talks about corrections, how corrections are to be handled either before or after closing. Some lenders, we've had this experience that some lenders, if we find that there's a correction, for instance, the middle initial isn't correct, some lenders will actually send a whole new package. Other lenders will require that the borrower mark through the initial, put the correct initial, and then initial that correction. Again, you're going to want to work with your lender to ascertain how they want you to handle those types of corrections. And then also, there are now some lenders that talk about settlement statements. Most of you probably use the ALTA settlement statement alongside the closing disclosure for disbursement purposes. Lenders, it's really interesting. Some lenders will put in their closing instructions that if there is a settlement statement, they do not want it returned in their package. Other lenders are requesting that if a settlement statement is used in conjunction with the CD, that they are requiring a copy of the buyer and the seller's settlement statement. So again, you'll have to look to your instructions to see how your lender wants that handled. Another requirement on the lender title policy, And lenders are very specific. Those of you that haven't looked at this for a while, you might want to revisit the items that your lender is requiring for their lender title policy. All of them are asking for gap coverage. I think that most people have that, obviously, when they do a loan policy. The loan policy is dated the day that the loan is consummated. And most of you out there, I'm sure your abstracting or your examining departments do up to the minute or up to date title exams to make sure that nothing has changed since the publication of the original commitment. Lenders also want their loan number to appear on the policy. Again, they talk about required endorsements, lien positions. We'll go into this a little bit later, but keep in mind lien positions are something that's dealt with on the policy, which is why it's under this lender title policy requirement. They talk about some allowed exceptions, which the closing instructions I read, I didn't find one allowed exception that was posted on a lender's instructions. They also talk about the insured closing protection letter, or the closing protection letter, what its requirement is for that, and it's required before closing. And then they also talk about policy issuing deadlines. Lender signature requirements. Lenders will often make the signing of the documents conditional on other conditions of the closing. So by saying that, what I'm telling you is that the lender may have all these conditions, but the last condition of their loan will say something like, it's conditional on the signing of all documents that the lender has presented to the closing agent for the closing. The lender also has to give us some consent in order to take care of some of these items at the closing table. Also, some instructions prohibit the closer from explaining certain legal rights to signatories, especially marital rights. I'm not making any of this up. These are all pulled from closing instructions that I have read over the last probably 3 or 4 months. I want to backtrack a little bit on lender POAs. The lender has to approve that POA. Again, as a closer, it's not our closing, it's the lender's closing. So if the lender is going to allow a power of attorney to stand in place of the original borrower, that is something that the lender has to actually tell us that they're going to approve that. And again, all these things need to be in writing. As you're going through these closing instructions, and hopefully this seminar will give you a refreshed eye to looking at the closing instructions, or helping your team members to weed through closing instructions. I don't want any of these things that are mentioned in closing instructions to prevent you from closing the transaction. If you see something that you think is out of the ordinary, you need to raise your hand and ask the lender. We're going to go through some samples here shortly. But I had one not too long ago in the fine print of the closing instructions that actually said that by signing the closing instructions that we agreed to all of the content in the closing instructions, and buried in those said that we would offer our company's financial on a yearly basis, our financial statements to the lender on a yearly basis. So again, by signing instructions, there's certain things you may not want to sign because it could put your company at risk, or it could put the company at a disadvantage, or it could go up against your company policies. Moving to the next slide is the first lien letter. I want to give you some information about this. We have actually worked with a large underwriter and a couple of other underwriters on the signing of first lien letters. Again, I'm an old closer, and for years we have just always signed the first lien letters. But when you start looking at them and you take them apart, some first lien letters are non-invasive, or they're not going to harm you because they'll say certain things like, as of the date of closing, you're assuring the lender that they are in first lien position. Others are so encompassing that you actually are certifying that that they will have a first lien throughout the whole life of the loan. My recommendation is that if you sign any first lien letters, and again, some closing instructions state that you have to sign those. In fact, I know of some lenders that will not give you a funding number until you actually sign the first lien letter and you send it back to them. But again, in working with a couple of underwriters, we have actually taken the verbiage that they have suggested that I have typed on this slide, and we've made stamps for our closing offices, and we will sign the first lien letter upon their recommendation, but underneath of that we will stamp this verbiage, and then we will sign it as well, because the point is that the first lien is actually provided by the terms and the conditions of the policy, not by the closing. So we don't want to get ourselves sideways with the lender, and we certainly want to comply with our closing instructions, but we do want the lender to understand that that first lien is actually provided by the policy, which is an underwriter function, not an agent function. We have been doing this for, gosh, probably 3 or 4 weeks now, and I did check with a lot of my closers yesterday, and we've not had one issue or one pushback lender by using this verbiage suggested to us by an underwriter. I want to give you a little bit of information about what we're finding on some closing instructions, just to maybe give you a little bit of a heads up. And the next few slides actually came from closing instructions that we have received over the last probably 30 days. Number 1, the lender must have satisfactory evidence of hazard/fire insurance. Do not disperse without evidence of hazard insurance. This particular closing, again, we had the information from the lender for the preparation of the CD on who the insurance provider was, who we were to make the check out to, as well as the amount of the check, but we didn't have any evidence of any hazard insurance. Not sure how your office wants to handle that, and you'll want to talk to your managers. But things like that, by signing this, we're certifying that we have the evidence of the hazard insurance. The next one, the right to cancel. This popped up in probably 15 different sets of closing instructions that I perused, and it speaks right to the federal guideline. It says, right to cancel, quote, each borrower, obligator and or persons holding an ownership interest in the property must be given 2 copies. All right, the reason for that, and the federal reg does say this, everyone that is signing that right to cancel on a refinance, which again is the borrower or the obligator, they have to have 2 copies in their hand. If they decide to cancel, they keep one for their file, and then they send the original in the time frame allowed on the right to cancel. A lot of these closing packages that we get now are great software programs, but they only include 1 copy of that right to cancel. So as a closer, before you even go into the closing, you have to make additional copies to comply with the right to cancel. Closing package, please deliver a legible copy of the fully executed closing package via your password secure email to blank or overnight to the lender at blank. Any original notes and checks due the lender should be overnighted to blank. This is something that we're seeing fairly recently. This is happening now in probably 10% of the closings that we see. I think from a closing standpoint is we don't want to keep those original papers, And it sounds like the lenders don't want to keep those original papers either. So this is an interesting facet, and maybe this is an onset to what's going to happen with the e-signing process that is currently being worked on with the CFPB and ALTA, and I think the mortgage bankers. But again, I talked to a couple closers about this yesterday, and they said, oh yeah, we've uploaded into their system, or we've sent it to them the way that they would like us to. But then some of the closers are keeping those because they're afraid that the lender is going to ask them for a hard copy of the package. I think as a closer, that's something we're going to have to get over. But again, talk to your managers about how they'd like you to handle some of that. Funding number. You are not authorized to disperse the funds without a funding number from blank. I find this interesting because sometimes I think that closers think that the lender doesn't mean them, that they go ahead and disperse being pretty confident that they have everything that the lender wants from them. And unfortunately, I've seen it happen too many times that the people are let go from the closing, and then the lender asks for something that perhaps may not be on the closing instructions. So one thing that we have found, and I'm sure most of you do this as well, if there are funding documents, we get those signed up front. We have someone else send those on so we can continue with the continuity of the closing and get the consumer taken care of in a timely fashion. Further examples of lender instructions: note, please have the note or document signed in blue ink. Again, I see everything from blue ink to black ink on lender instructions. Again, it's the lender's closing. If they'd like the documents in blue ink, it's probably best to do so. Title agent will provide affirmative coverage. This is a big one. We had an office that this happened to. I mean, this is a pretty broad statement about affirmative coverage. What does that mean? We actually picked up the phone and called the lender, and what they really meant was they wanted mechanics lien coverage as it was a construction loan. That actually means a whole different set of guidelines and underwriting on the closing and the title side. And it took us a couple days to work with the lender to make them comfortable and to make us comfortable as well that we were giving them the right coverage that we could actually meet our underwriting guidelines on as well. So if you just see some kind of a statement like this, you might want to raise your hand and find out exactly what they mean. Here's another one. I saw this actually over the weekend. It says, your acceptance of this closing instruction gives, and the lender's name went here, the right to audit your files. Wow. What files would those mean? Would that mean every file? Would that mean other lenders' files at random? I mean, really, what does that mean? Again, I think it's something that might want to be clarified. Here's an interesting one. The interest rate and the discount point are subject to change at our option any time prior to the disbursement of funds. Wow. What does that mean on a refinance? That you went ahead and closed that transaction and that the lender can change the rate and the term, or the rate and the discount points before we disperse the file. As a closer, how do you confirm this? Again, this is from a pretty big lender. I wonder how many of you have actually read this in your closing instructions. Another example, do not close this loan until you have cleared the following contingencies with the branch office. The document expiration date for the appraisal is, period. The appraisal was approved based on the following information: sales price, $, and seller contribution of $. Loan closing cannot occur if there are any changes to this information. Interesting. We don't know anything about this, and as you see, these types on the slide is exactly how they were typed on our closing instructions. So all of this was in caps. as a closer, what do you do with this information? Here's another one. You are to close in accordance with these instructions and the master closing instructions. Interestingly enough, there were no master closing instructions with this file, and when we called the lender to inquire about it, we were told that they had no idea what we were talking about, that they don't have any master closing instructions. Here's another interesting one, and this one kind of gave me the creeps a little bit. If the pending loan will be insured or guaranteed by the Federal Housing Administration, FHA, or Veterans Affairs, VA, you are also required to comply with any additional requirements of the specific agency as applicable to title or settlement agent. Now, as a closer, my head is already spinning because, in my opinion, I think I know a lot about FHA and VA transactions, but I'm certainly not an FHA or a VA underwriter. And so I'm not sure what additional requirements of the specific agency would be applicable to me as a title or a settlement agent. That's a pretty broad statement, and I'm not quite sure what the intent of that one is. This one has actually sparked some discussion in our office. Any document provided by the lender that includes the customer's Social Security number or government-issued identification card, driver's license, passport, etc., must be returned to the lender and should not be introduced into your closing file for retention. Once these signed original documents have been submitted to the lender, all copies in your possession must be securely destroyed immediately. All right, think about that. Again, I'm a closer. We keep everything. We want to make sure that if a lender calls us back, that we have an opportunity to get them a document that they say perhaps did not get into their final closing package. Also, how do you handle the compliance of this if you're the notary? Because as a notary, your notary bond says that you have to properly identify, and I'm sure that you have company policies as well that state that you have to have a copy of their driver's license or anything that would identify them. And again, we're an insurance company. Wonder if there's an allegation of fraud, or I can't even think of the possibilities. But what do you do with something like this? We are going to have to keep some of these documents, so I think we're going to have to work with lenders in the future to satisfy these kinds of requirements. Another example of lender instructions. No individual may perform settlement activities for any real estate transaction in which they are involved with the seller, the buyer, the borrower, real estate agent, broker, or loan officer. Wow. Does that mean if I have a customer that's been a customer for 30 years, that constitutes involvement, that I know them? I'm not sure. That's a pretty broad statement, so I do think that's something that needs to be clarified. My guess is they're trying to make sure that there is compliance with hands-off transactions of the settlement agent and the settlement procedures, but again, I think that's something pretty broad we need to look at. This one's interesting. If at any time you are directed to perform any activity that is contrary to the lender's instructions or unable, you should report this undue influence by calling blank. Again, this is a very, very broad topic, and what is considered unethical, I think we understand closing instructions, but this warrants edification, at least in my small shops. We're going to talk about this a little bit another time. Here's another one that's interesting. Do not allow customers to sign using such titles as doctor or as in a corporation, partnership, etc. I do understand the doctor, because if they sign as doctor, they're not signing individually. But the whole purpose of having a corporate veil, such as in a corporation or a partnership or LLCs, those types, are so that you can sign on behalf of your company. I'm not sure where the lender was going with this particular piece of instruction. I like this one. This says, when meeting the customers, you are expected to wear business appropriate attire and act in a professional manner at all times. I would certainly hope that as closers we give it our best every day, and I'm sure that those on the line that we do. All right, here's a couple tidbits on how to push back on lenders. Number one, if there is something that you cannot do or that goes contrary to your company policy or something that you have a question about, raise your hand and call your lender. We've had to do that multiple times, and we find that lenders want to work with us just like we want to work with them, and they can clarify any questions you may have or change closing instructions. Again, remember to get those in writing. And I just told a closer this day we had to get something different in writing from a lender. I asked her to attach it to her closing instructions, and it was an email directing us to do something a little different than our closing instructions. Attach that with your closing instructions you're signing and send it back to the lender. Make it part of those instructions. Work with your underwriters in the signing of the first lien letters and follow their suggestions. And always, always, always get your changes in closing instructions in writing. One other thing I do want to share with you, and it's a little funny, I had an opportunity to be in front of a group of experienced closers not too long ago, and I don't even know, had 60, 70, 80 people in the room, and those of you that know me hear me talk often about reading your closing instructions and the consequences. Well, when I was in front of this group, I passed out a piece of paper, and it was talking about, actually it was at the ALTA convention, talking about thank you for coming to my educational lab about closing instructions, and ALTA's always working with people to educate. It was just a whole thing. Well, anyway, at the end of my presentation, I actually put a copy of a blank check up, and I said, what is your signature worth? And then my next slide was something that was in paragraph 6 in the document that all of my people at the seminar signed on their behalf for me, and it talked about, by signing this document, you are certifying that you will give ALTA an extra $5,000 this year for educational purposes. So after my presentation, I had quite a few people come up and say, oh, Margaret, you rushed me and I didn't have a chance to read it. I never would have signed that. I had a couple come up and say, I trusted you, various things like that. But the moral of the story is, please don't get caught signing something that may put you or your company in jeopardy. Jeremy?
All right. Thank you, Margaret. Great advice. Thank you for rolling through all those eye-opening examples of the closing instructions that you've been seeing and the tips on how to push back on lenders. And again, yeah, thank you for the new education fund for ALTA. So we appreciate that. I'm just going to wanted to take an opportunity to share a little bit of what ALTA is doing with the NBA in this arena in effort to standardize closing instructions. And this has been a difficult task in the past. I'm not sure how many years ago there were efforts, didn't really go anywhere. Wasn't a whole lot of appetite from the lender's side. They didn't really see the benefits of standardized closing instructions. There are some now that do, and we're hearing oftentimes the lender's closer doesn't even really see their closing instructions because they're automatically generated from the doc provider software. But with the guidance from several of ALTA members, including our ALTA past president, John Hollenbeck, as well as Jim Lampier, and I'm sure plenty of others I'm not giving proper recognition, ALTA plans to draft what our industry believes closing instructions should look like. And as you can see on the slide, those are the main areas we're focused on: readability and content, comprehension, compliance, and when the closing instructions are delivered. Some of the ideas that are in the hopper and being considered are a one-page transaction-specific cover page and a common checklist that would include the important information and that's clearly displayed. And content, Alta is looking at various things such as name and address of the borrower, loan amount, loan number, information to help the closing agent provide lenders accuracy of recording fees, like the number of pages in the documents to be recorded, and information to help accuracy of cost and coverage, like any endorsements required of a loan policy that Margaret actually touched on earlier. And other things looking at font size, maybe a red line copy of changes from what's set before. I believe this is done in commercial transactions, and document versions on the page of the document to help identify inconsistency between the different versions. And ultimately the goal is to help make it easier for the closer settlement agent, as long as the lender's closer, to resolve any issues, where there are questions with the instructions. And as I mentioned before, if you do have any questions, we do have about 10 minutes. I know we had some issues with the audio, so we could, maybe go a few minutes past the hour. But if you have any questions to pitch to Margaret, please use the question box, and we'll spend the next 10 minutes addressing them. Margaret, we did have a few come in while you were talking. A couple asked, about signing of the closing instructions. Tricia specifically asked, what happens if we choose not to sign the closing instructions?
I've had a couple of lenders state that they don't really care if the people sign the closing instructions or not. In fact, if you look at Wells Fargo's closing instructions, I don't believe they require a signature anymore. You want to be careful with that, though, because buried in your closing instructions, possibly, and I've seen this before, would have some verbiage that says something like this: by accepting the wire and by closing the transactions, we, the lender, are assuming that you have accepted all of our closing instructions. So you have to be careful that that verbiage isn't in there. We've had some lenders that we did not sign the closing instructions, and we haven't gotten any pushback, but we have some that we haven't signed the closing instructions that have actually required that we do so after the closing. So I think at this point it is something that you're going to have to look at on a case-by-case basis. Again, make sure that verbiage isn't in there about accepting the wire and the documents and closing the transaction.
All right, thanks, Margaret. Interesting question about the color of the ink that's used. Maybe you got to have black and blue pens available. But question here is that some states require docs to be signed in black ink and won't notarize if signed in blue. What do you do in those circumstances? Do you just, give a call to your lender and let them know what the requirements are in that state?
Yeah, you're going to have to, because if you can't get the documents placed of record, obviously on the title side, you're going to have a real issue. In fact, a lot of you that have departments of insurance that are active in the title industry probably have certain guidelines of when those documents have to be recorded. And so don't set yourself up for failure. The first thing I would do is contact the lender and make them aware of what your state law is, and then get in writing the change on the closing instructions. Okay.
And Margaret, this question is specific to when you were talking about one of the closing instructions, talked about changes to the APR, I believe. And this question was, the right to change the terms of a loan would violate TRID by the lender, correct? Wouldn't they need to stop the closing and redisclose, and issue a new CD?
Well, I'm not going to speak on a lender's behalf, but I think on the closing side of the table, we are seeing quite a few lenders who may not understand the timing of TRID, and therefore we're still getting some closing documents after the closing is supposed to start. So with that being said, I don't know how a lender would handle that. Some lenders are saying that they're sending out initial closing disclosures. again, I don't want to be responsible for lenders, whatever their activities are or what their guidelines are.
Mm-hmm. And we did have a comment just came in from Donna, just a reminder, TRID compliance is for residential mortgage loans only, it doesn't apply to commercial. Let's see here. A few questions are popping in about TRID and compliance and liability. I know Alta in general has seen, closing instructions shifting liability to the settlement agent in regard to TIL liability. Margaret, are you seeing some of the same things as well out in the field?
We are seeing some lenders trying to shift liability to the closing agent, but I do think that the CFPB and ALTA stopped some of that in its tracks with the issuance of a letter from the CFPB that said that the lenders, even though they're trying to shift the liability to the settlement agent, the lender is still totally responsible for TRID.
Yeah, the CFPB, Mr. Director Cordray, they did issue a letter. We're definitely pushing them to try and be a little bit more specific on that issue. All right, a lot of questions still coming in here, trying to sift through here. Here's an interesting from Tanya. Margaret, how do you handle a situation when you don't find out until the buyers have already signed the final closing disclosure from the bank and they want additional endorsements?
Would you read the question again?
Yeah. So the buyers already signed the closing disclosure from the bank, but they want additional endorsements. I'm not sure who is wanting the additional endorsements. I'm guessing a lender. How do you handle that?
Sounds like the lender is wanting additional endorsements. If that's the case, we still have to comply with their instructions. We would issue the endorsements, and here's my guess where this question is coming from. Those endorsements in most states cost money. The lender has not disclosed the proper fees on the title side. And then as a closer or a title company, we get the phone call from the lender saying, you're going to have to take that fee off of your closing fee or whatever fee that is not state mandated because we are now out of compliance. Well, my suggestion is the lender is the one that is requiring those endorsements, and we have to charge them because it's a state mandated charge. And if the lender has failed to disclose that to the settlement agent, therefore making them out of compliance, they're going to have to redisclose. Okay.
All right. Well, I think we'll take one more question. On the last slide, there is contact information for Margaret and myself, and you can feel free to reach out to Margaret. She said she'd be more than happy to try and answer your questions. Margaret, a little bit on responding back to lenders and trying to modify the closing instructions. Janice asked, if you scratch out parts of the instructions that are not acceptable, does that release your responsibility or liability?
Again, not necessarily so. That is something that is sent to you that is, it's a contract, if you will, and the changes have to be agreed by both parties. Again, more and more I'm seeing information in there that whether you sign the instructions or not, the lender is stating if you've accepted their money and you have funded the transaction and you've accepted their documents, that has created the same thing or the same obligations as if you've signed the closing instructions. But a contract has to be agreed by all parties. So my suggestion is talk to your lender. I had one lender that the instructions we got were completely out of line of anything that my company would like to do. And in fact, when my closer sent me the instructions, I warned her we may not be able to close the transaction. And much to my surprise, the lender actually reached out to me and asked me what paragraphs or what lines I would like to strike. And after a couple of days, those closing instructions were rewritten to our satisfaction, and we were able to comply with their instructions. Now, don't get your hopes up. I'm not saying that every lender is going to be able to help you with that, but again, it certainly doesn't hurt to ask.
All right, fantastic. Thank you, Margaret. And thank you all for joining us today. About 1,000 people were on today's webinar. Definitely an important topic. Watch Alta's news. We'll be updating you on progress on these standardized closing instructions. Just as a reminder, our webinar today was recorded. If you need to go back to it, or if you think you have other closers or other in your office that this webinar would help, we'll be providing a link, and you can access it on demand. Also, let me know if you need a copy of today's presentation, the PDF of it. I'll send an email. I'll email it to you as well. Looking ahead, our next free webinar will be in December, and we will be highlighting changes to Alta's best practices and the recently released best practices maturity model. And next month we'll be offering our fourth and final presentation of our 2016 compliance webinar series. In this presentation, we will be addressing the unfair, deceptive, and abusive acts and practices, and how to protect your company from potential CFPB enforcement action in this area. And with that will bring us to the conclusion of today's presentation. Margaret, thank you again for this great discussion on closing instructions.
Thank you.
And we hope all the listeners found today's presentation useful. Take care, everyone.